want to invest now, what can you do? Good evening, ladies and gentlemen. Welcome to our long lost Facebook Live. It has been don't know how many months since I do and host a Facebook Live like this. And I think tonight's discussion will be extremely interesting and super, super exciting because tonight we are going to talk about growth stock, tech stocks, and the upcoming market, our personal opinion or how we see it, how we position our portfolio. And today I have got a few, I would think people that are quite good in speaking about the subject today, which is growth investing. Why? Reason being is if you look at Tesla, the company that have 10x, 20x, these are the people that I've invited today that have started talking about Tesla even way before it became so popular. So tonight you're in for a treat. So type in hi if you are able to tune in and you can hear us and hear me well before I introduce my guest to you, right? I know it's been like so long, like few months, and we have not been so active, but tonight's content is gonna be a boom, right? So make sure you're able to come join and tune in and get the most out of this. And also later you can ask questions as well in some of the sessions when we have like break and some of the questions are relevant. I'll highlight it and then we can have a discussion. So it's just a casual chill session, and tonight's session will be framed more like a chill session. So it will be like a few panelists and we are just discussing stocks the way we would do if we are just yamcha minum kopi like that. And you can just tune in and you can be one of the people to chime in or even ask questions. So if you know anyone that invested in any of the growth stock, tech stock, and they would like to participate in this conversation, tag them, send this video to them, and we are gonna start. All right. So the first guest that I'll invite, right, will be our friend from Singapore, right? His name is called Ming, and he's I met him about a few years ago, and he's an investor with more than 10 years experience, and he started investing and trading via options, and right now he's managing a portfolio of eight figure means what, like 10 million plus US dollar. So it's gonna be interesting and exciting to learn from him. And in the past 5 years, his average ROE return on investment is over 30%. So I think definitely I would like to hear his idea, his input on the market. And see, right now itself, we already got a question from Gogo. How do we make sure we don't overpay for growth? We're going to discuss that as well. So hi, Sweeha. Hi, Gumit. Hi. Right. Okay. So without further ado, let's invite our guest, Ming, to say hi. Hi, Ming.
Hi, everyone. Hey, thanks, Ming Tek, for the invitation for tonight's session. Really glad to be here. Good evening to all the Malaysians and Singapore friends.
Thanks for joining us. So the next guest that we have is Warren, right? Warren from FA Academy, right? He managed a family office. That means he managed his own fund. And he also run an establishment like an investment school to, educate people on how to invest. And I think, he's an interesting investor as well. So hi, Warren.
Hey, what's up, everyone? This is Warren Howe from Academy. Thank you, Mintek, for inviting us to this casual chit chat. I'm excited to be here.
Okay, and last but not least, our familiar guest on the show, Mr. Rondi, right? Which needs not much introduction. He's an avid investor, angel investor, early investor in Tesla, active contributor in StockBit, and he's also one of the people that really drive a lot of the information sharing in the local Malaysia investment scene. So, hi Rondi. Rondi, you are still muted.
Yeah, sorry. Hi, everyone. It's good to be here again.
All right. So thank you, Rondi, for joining us. Despite it's been a busy week for you.
Yeah,
So let's
it's okay.
start the discussion for today, which is growth stock. But before we even go for like specifically growth stock, let's just talk about like how do you see the current market situation? We have inflation, we have the tech stocks dropping like today, even in Malaysia, a lot of the tech stocks are not doing as well. So a lot of people may have this question on whether right now is the beginning of the end, or is this a small dip? We are still in the early, bull market, or this could be like the fastest bull market and the next bull market as well. So let's start with Rondi. Rondi, what do you think? Right, current market sell off on the tech counters um, and growth counters. What's your opinion on them?
Uh, well, I actually am in the opinion that, because of the things that happened in 2020, the Fed's printing money and everything, I always knew that 2020 and perhaps even 2021 was going to be rather good for the equities market. But I knew that all this printing and yeah, all these sort of like actions will have some consequences later on. Whether or not it's 2022 or a little bit later on, I don't know because we just don't know when the market is gonna just reverse. But I thought at the beginning of the year, I think if you guys follow me in Stockbit, I did mention we should actually take a slightly more defensive approach. As much as I am a growth investor as well, but maybe it is time to sort of like rebalance a little bit towards higher quality growth stocks and whatnot lah, because of what is to come. However, what I did not predict was basically the war, right? The Russian and Ukraine conflict. I think that really expedited a lot of things, and it basically created, I would say, like a bunch of potential black swans possibilities due to some spillover effects that could happen uh, from what had been going on and what actions had been taken by just the governments and the leaders around the world. So yeah, I personally think that right now I am more comfortable to be a little bit more defensive rather than being more like quite gung ho like the way I was in 2020 2021 lah.
So by more defensive, do you mean by keeping some cash, or maybe we go for a little bit of dividend defensive like REITs?
I think I would probably have a good portion in cash. Definitely have a well diversified portfolio, an all weathered portfolio. And at the same time, as much as, when you are talking about growth investing, growth stocks, um, I personally am in the opinion that, yeah, while you can still be invested in growth, but perhaps the percentage of that where where you are investing in a real high risk sort of like growth stocks can be perhaps it's better to be minimized. But just for everyone's info, the entire thing that I just mentioned here is basically in the pretext of an actively managed portfolio and not you as a long-term investor. I think you as a long-term investor, all these are just short-term noises. Yeah. So if you're a long-term investor, just focus on the business and invest in the long term, lah, basically.
So you would say that if we are gonna buy growth stocks, we want to be moderating in, not like like so gung ho rushing all in like that of the portion. Want to be like gradually, if ever, right? That's your stance.
Yeah.
Okay. So, what do you think, Remy, on the current situation, war, and increasing interest rate, inflation? Do you foresee there will be a big market crash coming? And if yes, should we still be holding or buying more growth stocks on the dip? Because right now, a lot of people would think they're quite cheap. They've dropped 60, 70% from the top. And I know you also buy like companies like C Limited, Volunteer. So what's your thought on that?
For me, I try to take a more zoom out approach, zoom out like a longer term approach. So yeah, I think recently there's a lot of fear in the markets with from Ukraine war to like supply chain issues, coming recession and all that. But I think also if you use history as a guide, history don't repeat but it often rhymes, right? So over the last 30 or 40 years, every few years there's wars, right? There are wars. And every few years there are like, recession. And every year there's like bad news out there in the markets. But you realize, right, history has proven itself. That means every year, at least in the US, for the US markets, it always go on to a new high. So for me, using this history as my ally, right, like knowing history is there for me. I'm more comfortable and just looking at investing in the best companies and not trying to like time the market. Like, am I predicting a recession? So although I have my own bias or views on what's going to happen in the next 12 months in the general market, but I try not to let it affect my system in terms of how I deploy my funds. Yeah, that would be the a summarized version of how I view all the macros issues.
So it's sort of like business as usual, just
Yeah,
go
correct.
in
Business as
better.
usual.
So
I mean now, like growth companies especially are on quite a good discount, cheap in your layman words. So if it's cheap, then just buy low. Yeah, because we all know that we cannot time it to the exact bottom one. Not even Warren Buffett can. So I don't play that game of like trying to time to the exact bottom. But I just dollar cost average in over the years or over the months. I think most of the viewers here, you guys might have a job and then you have like some of the salary coming in. So and you just deploy it every quarter, every month into your your top conviction companies. I think you will do well over the longer term. So the keyword here is a zoom out approach. So I do not know what will happen in the next 6 months. I have my own views, but I cannot be 100% sure. But I have more confidence if I will stretch out my time horizon. Yeah, that's my view.
So can we say that you're still fully invested, but with
Yes,
the new
I am. I do disclose to my community in Singapore that I'm quite fully invested. That means I hold close to 0% cash. Yeah.
All right. So let's answer one question here. Rondi, what do you think would be what do you think is a cash ratio that you'll be more comfortable with this year, right? Portfolio cash ratio.
Okay, so for my actively managed fund, and when I mean by actively managed fund is basically I get compensated for it on a yearly basis lah. So I do need to actually say minimize my losses, or say maximize my return, because there is always like a high watermark, right? So you don't really want to be too far away from the high watermark, otherwise you're never gonna be compensated in that big profit sharing where the majority of the money comes from. So for my actively managed portfolio, it is about 33 to 35% cash at the moment. Although I would have to say that some of this, so whilst it's about 33 to 35%, I do have some funds being invested also in very very low risk sort of like investments. So things like a merger and acquisition arbitrage, which I find some in Hong Kong, like maybe like a Razor, for instance, right? So while it's about 33 to 35%, if you include all these like very very defensive stocks, it can be higher actually. Yeah, but for my long-term holdings, these are basically stocks which, as Riming mentioned, you just focus on the business. You just focus on picking the best stock that the highest conviction that you have. the business that you know best, right? So for this, of course, I do have a couple of stocks, and it is very, very concentrated. From time to time, whenever I do have, say, my monthly salaries or what, I do try and invest in the ones which I feel has the best sort of like investment return lah. The one that I would like to build up my position because I feel like I know the company better. Maybe the company is trading at below its where it is at the moment when it comes to the business projection and all that. So yeah.
Okay, thank you for your input, Rondi. How about you, Warren? What is your cash ratio like and why, right? Are you anticipating market crash or you're still very bullish on growth stock? Because growth stock have been really beaten very badly, right,
Yeah.
lately. So it seems like it's the end. It seems like the bubble burst. So what's your thought on it?
Yeah, so similar to Rondi, I also have actively managed funds. I also manage funds, basically. Like I said, family office and close friends and whatnot. So that being said, the style is different. You know, if you are a normal, I mean, we are normal retail investors, but if we have sort of like a 1 year goal for the portfolio, and that style is a little different. Now, for Academy, what we preach is a smaller portion on actively trading. That means it's more liquid. So that is like a replacement of cash in a way. That's what we do. It's either a 20/80 or 30/70, where trading could be like either from FIFO, right, fast in, fast out, or momentum. That's what we do. So in that aspect, you could say we are all invested, but on the side also, we 20%, right? We used to be fully in 2020, 2021, but obviously now we have to be more cautious. Like, it's not 2020 anymore, right? But just to answer you, that question is that because for smaller portfolios, like the reason why we're having that 20/80 and 30/70 is because, number one, we are doing this full time. Okay, we are looking at stocks every time from what is the new thematic play. Like, for example, Russia v Ukraine. I've been preaching this since February 24th. I still remember the date. We went in stocks like Devon, upstream oil and gas players, like basically Oxy, Console Energy, and these are things that we are quite new to, but we had to just quickly build a thesis and go in. That's because we want to capitalize on sort of these movements, because whatever events happen, there'll sure be stocks going up, there should be stocks going down, right? There's always a bull market somewhere. So that's what we do, and that's where the 20% comes in, and that's why we are really, really liquid in that way, right? Fast in, fast out, fast in, fast out. So sometimes it's not that way. We also traded like fertilizer stocks, IPI, AA, aluminium stocks in the US and whatnot. So to answer the question, I think, and it's not for everyone, this style is not for everyone, right? And the game plan is that whatever gains that we have on these sort of short-term thematic trades will be fueling it for the long term. So for example, we're going to be talking about Tesla, right? I'm sure everyone here is a Tesla bull. The game plan is to, have gains from there and just DCA regardless of the stock price onto these long-term winners. Now, I'm not talking about winners in, stock price. I'm talking about fundamentally winners, growth, right? So yeah, that's what we do. So I would say comfortable cash position that we really, really want to be mindful of, 15 to 20 this year. I still think the S&P 500 will be positive this year, to be frank. Although I don't really like to time the market, but I still think so because the cycle has not really tipped yet. But I could be wrong. And the Russia v Ukraine is not really as doesn't really affect US as much, right? Deglobalization actually benefits US. That's why miners like LAC can benefit. MP Materials, So these are the sort of stocks we're actually hedging onto and looking into. And that's where we, like, seriously, there's so many deals out there, like not enough cash, you know what I mean? Like not enough money. That's what we are eyeing on, the certain trades. So There's not really like a fixed figure, but obviously keeping more cash is good because it's not like 2020 anymore. And what I want to go into those stocks that are not really talked about in Wall Street, like CLF, steel players. We look at YKGI or Melewa steel players in Malaysia, but why don't we look at US? Like seriously, their earnings are going to be insane, right? Upstream players are going to be insane. So I'm like an earnings whore lah. I follow earnings. I try to project whether or not this makes sense. So far so good. That's what I can do to hedge, because I'm actually long in SoFi, which is fintech stocks, which has been doing really bad. I'm down 50%. I'm not ashamed to admit it, but that's where I need to be actively, telling myself, hey, what's the next bull, to actually hedge my losses. So that's why we are really actively managing all this stuff. Yeah.
Thank you for sharing. So it's more like you have a long-term portion with a small 10-20%
Correct.
portion.
Correct.
Can I just chime in something also? I think regarding a question on like what's the cash ratio right now, right? From the audience, an important consideration is also what do you think for the audience, right? What do you think is a cash ratio that is comfortable for your own investing style and risk tolerance? Because Warren Buffett can share with you his cash ratio. We can share, all the gurus can share with you our cash ratio, but it might not be suitable for you also. In the sense like, so what even I'm all in, or so what even I'm holding 50% cash. Do you just follow blindly? So you have to base it on your own cash ratio, have to be based on your own comfort level lah. Whatever is the sweet spot between investing when the markets are down and also being able to sleep soundly at night lah. You are not worried about the market crash and all. So I think that is an important consideration that audience should have at the back of your mind when considering this question. Yeah.
Thank you, Rayming. So guys, I know you have been tuning in for over 20 minutes now, and we have only discussed one topic, which is a very good topic on cash ratio, how you're positioning yourself for this market. So if you love this sharing, type in love, right? Or give us a love, right? Please help us to hype up and make this a more interesting discussion. Or you can even ask question and comment, what will your portfolio cash ratio like maybe Jeff put 100, right? Maybe I don't know, is that like you want to put 100% into stock, or how many percent you want to invest this year? Maybe you can comment there. How many percent you want to be invested and how many percent cash? 80-20, 70-30, or 100-100, right? Okay, moving on to the next topic, which I think is super interesting. And this one, I won't go one by one. If you feel like chiming in, just chime in. So talking about growth stock, right? And like Warren is down 50% on SoFi. And I know it must feel like really, I don't know whether you doubt yourself sometimes, but I know, this is not a rare situation, especially when investing in growth companies. I think Rondi at one point also was down, a little bit in Tesla. So maybe you guys can share, the audience, maybe Rondi or Warren first, can share like when you're down so much, how do you make yourself not so emotional or won't, doubt whether you made a bad decision? Because it seems like it is a bad decision now, right?
Yeah, I think Ming Tek was talking about how I used to go to his I don't know what was it, like a retreat, right?
It's a
Yeah.
retreat, yeah.
I think that was sometime in 2018 or 20. I think it was in 2019 lah. And during that time, I've been talking about Tesla since like 2018 quarter three. When Tesla actually made a quarterly profit. So before that, I was also bearish on Tesla, right? But because of that quarterly profit, it really changed my view. And I suppose investing in startup companies as well, it changes my view when it comes to investing in growth stocks. So yeah, so I think in 2019 when I was in Ming Tek's retreat, I think I was down about 50 or 60%, and Ming Tek was asking me about it. But I think my conviction on Tesla during that time, it was very, very whole. Like I know that the market is missing a point over here. And yeah, I think at the end of the day, when for you to be able to hold 50% or 60% losses, it should actually be a criteria in the first place when you're investing into a stock for a long term. So for instance, there are normally some checklists that you would like to write up. Is the owner a fanatic? Is this company changing the world in a sustainable manner? Is it disrupting some industries and all that, right? And then I think one of the important question, especially if you are investing for the long term, that you should ask yourself is, at this price, can I stay invested if the counter is minus 50% down? So when I was investing into Tesla, the answer was yes. I knew it could happen, but I knew that in terms of the trajectory, I just know that the market was missing the point lah. And I would have to say that even for Tesla, it was actually a borrowed conviction for me. I am not the first person that basically was a Tesla bull, right? And my thesis on going long into Tesla is because of the community of which Tesla investors had built in itself. So I think having a healthy community helps as well, especially when you're holding into a company where you actually are investing for the long term lah. And yeah, so community like Stockbit, if you're Malaysian, you can join as well.
Okay, thank you, Randy. How about Roy Ming or Warren? Do you have any insights for our audience? Like when your stock is down so much, but actually sometimes, right, you're not sure whether it's right to continue to hold, because sometimes you really buy something that is gonna go down to like 90% and won't recover. So how do you differentiate that, and how do you deal with that uncertainty?
I actually feel quite zen, during market drawdowns. I think like to add on what Ronnie said, like you need to be comfortable with the stock dropping 90%. But another way to do it is also over the years I trained myself to be detach my emotions or my net worth from how much the market is fluctuating or how much Tesla is dropping this year, that kind of thing. So after all, you're buying a piece of the business. So for example, let's say just using a property analogy. So let's say the house you're living in is worth 1 million right now. Just because someone randomly just lowball and bid it 500,000, 50% discount, doesn't mean you need to sell, right? You know what I mean? So it's the same with the markets. Yeah. So I think there's a good way of looking at it. So I think like what Ronnie said, market volatility, whether is it a spike up or market drawdowns, are part and parcel of investing. Just like if you were to drive a car, right? Sometimes there'll be green light, sometimes you'll be stuck in a red light. If I stuck in a red light, will I get depressed or will I sian? Or now today 3 red lights in a row? No, it's just part and parcel, because when you want to drive a car, getting the red light at the traffic junction is just part of the deal. So similar with investing in growth companies, the volatility, if I'm investing for long term, it definitely will be there. Just like Warren Buffett, he's the world richest, but he had endured through a lot of market crashes and drawdowns and all that. So it's something that it's just a walk of life or way of life for investing. Yeah, something that we have to accept as investors.
All right, how about you, Warren? Warren, you're muted.
Yeah, sorry. Yeah. People who just came into the market, especially in 2020, the market's on steroids and everyone think that they can fly. Got meme stocks, they can fly, got GMC, AME, whatever, GME, AMC. And markets can be really brutal, like really, really brutal. What we see in fintech stocks that can really question ourselves, like basically differentiates you between a
Warren's line is a bit not so good.
So hear me?
Yeah,
Okay,
you said
sorry.
basically
My
differentiate
internet got
something like that. Yeah, you were stuck there.
Yeah, sorry. So basically the market is differentiating us between boys and men. Okay, the men will be holding strong and looking back at the fundamentals, looking back at the projections before we click that buy button, which is so easy to do, right? Just buy and then okay, that's it. We need to have a buy plan. Let's put it that way. We need to have projections. We need a buy plan to distinguish whether or not it's a it's a solid stock. So we need to basically, how do we differentiate whether or not it's a loser or winner in the long term is whether or not we are realistically paying for a 5-year premium or a 3-year premium or X amount of years premium. For example, Lemonade. Right, I'm a coach. I'm a part-time coach in American Discord lah. Okay, YouTuber. I think I'm on 2 Discord groups and I coach there. So there was one stock that was approached me by members. That was Lemonade. When I looked at the, I don't just look at the numbers. Okay, I look at qualitative, their optionality, their growth potential, management, blah blah blah. So why am I bringing this up is that we want to avoid, especially in this time now, to be paying for like a 5-year premium, something that will only realize in 5 or more years, right? So that's the thing. I mean, that's how you can distinguish whether or not it's a loser or a winner lah. And like, for example, SoFi, my path to profitability for SoFi personally is within 2 years. Upstart is already profitable, so that's another story. But if you're comfortable with that, and even though the whole market is, brutal and re-rating, it doesn't matter because you're owning a business, right? But obviously, I want to say the mindset should be like owning a private business, because I also have private investments. But it's a little bit more difficult because you can see the stock price. You can literally see your NAV go down and up, right? You can't do that in a private business or farm. But if you can switch the mindset, especially for those long-term investors, if you can switch the mindset better, and instead of selling when it's going down, you should be thinking about buying when it's going down, because your risk is minimized. Then you'll go a long way, basically. You can pivot yourself, very well from there. Yeah.
But there's just one question that I think we need to answer more, which for me the answer is not so simple. Is how do you differentiate those that are on the path, they haven't been profitable yet, they are just temporarily beat down, versus those that are overvalued, they don't have a path to profitability, it's just all hype and story, and it may not work out. So those we may want to cut loss. So I think a lot of people, they are struggling, they are uncertain there. So any of you have any tips? How do you differentiate that? Like those that are, everybody want to say they are growth stock, everybody want to say 5-year plan, loss now, temporary, but not everyone.
I think it's quite an easy or clear distinction. So you just look at the financials, their income statement or the balance sheet. So I think to add on to what Ronnie mentioned, growth stocks you can categorize into 2 categories if you talk about profitability. One is that companies that are already profitable or have a clear path to profitability. The other one is that they are perhaps still burning cash and they do not have a clear monetization plan, or at least investors cannot see their path to profitability just as of now, right? So if you give examples of companies that are really profitable, would be like Tesla, Coinbase, companies that are not profitable now, but they perhaps have a clear path to profitability. Could be like, for example, Shopee, right? If they were to increase their take rates, right, they could be profitable anytime they want. It's just that they choose not to. And then companies that are perhaps still burning, maybe like Twitter, for me, I don't see how they still. I'm still not convinced about their monetization plan just yet. Yeah. So I think in this climate for growth companies, I will err more onto the side of caution. I will find companies that have a strong balance sheet. It means they have like ample war chest, sufficient war chest, good cash flow coming in. Yeah, so that because as interest rates goes up, their cost of borrowing is more expensive. So if they have a sufficient war chest like Tesla, they have like lots of billions of dollars waiting. So they have no problems like expanding new factories or coming years. So long story short, their business, there's no impact on their business no matter how interest rates were to, or how high interest rates would go up. Yeah, compared to a company that is like struggling, they will burn out their cash in the next 9 months or 12 months. They need to, cut on their R&D. They need to cut. They need to like sack their employees and all that. That will not be an ideal situation for a company to grow.
So it will be to see their balance sheet, and you have to study the company to know whether they have a path to profitability or is just grow, burning cash.
I think you have to
making money.
find out more. Yeah, you have to find out more about the company, like like read out during the earning transcripts and all that, share how the management is sharing their path, like, how are they going to from where they are right now. So most growth companies are just focused on, or at least start increasing their top line or revenue, but how do they transit to being a profitable, or what is their next few years plan?
To increase the margin, right? So in short, they must have enough cash now while they are burning money, and you are comfortable with the cash level that in their plan they should be profitable before they run out of cash. Number two is there must be a very clear path that you can see milestone by when, step by step, to be profitable, and hopefully within 2-3 years, like that. That is how to differentiate. Okay. Any other one to chime in? Yeah.
There's something I want to say, by the way. Like,
Yeah.
I need to thank Rondi for making me a huge Tesla bull. That's what I want to say first.
Oh.
Because, like, and I mean, the topic of profit probability, okay? Because that time, when I used to be like the numbers guy, just looking at numbers, hey, debt, high debt, okay, out, right? Losing money, I'm out. But it doesn't work that way. It doesn't work that way. Like, how do we invest in growth stocks if we just look at, debt, liabilities, net income? It doesn't work that way. I think is more important is obviously growth potential, ability to have market share, and whether or not it makes sense. So whether we like it or not, we're investing in businesses, right? So we need to have somewhat that the business sense, which you can't really teach, in a way. It's more like experience, and it's obviously trust in the management. So Elon is we need to see who is that person running it, right? And Ron Barron said it before. He missed his chance on investing in Amazon, Jeff Bezos. He's not going to miss the chance on investing in Elon Musk while during our lifetime. You know what I mean? So it's what I'm trying to say is that, growth stocks is about not only on the numbers, to be frank, it's about potential. It's about the sense that you have, whether or not they can grab market share as they intend to, and what is their game plan. So just to share a little bit about Tesla, I clearly remember 2019, he raised 2B, that, because, and he pitched to everyone, he needed that to expand Shanghai Gigafactory, and what sort of amazed me as well is he could convince China, okay, to be the first foreigner to be having 100% whole business without any government intervening into their market, their share. And they can, China loves Tesla, so But what I'm trying to say is that really pulled off, because, and I really have to respect those early, they're even. I'm in this Tesla shareholder group, a lot of groups, and they have been having Tesla since crazy early, decades ago. And I really got to respect that. You see a stock going down at 30%, 70%, and then you're still holding on until now and having a now 1,000%, So it's all about, I think it's more than the numbers, to be frank. It's about the business. It's about whether or not, and obviously there's execution risk, but it's more than numbers, in my opinion. It's more of whether or not they can grab share and grow, essentially. Whether or not what they're preaching makes sense. A lot of things to consider, but yeah, all in all, is that for growth stocks.
So yeah, I think coming so I think coming back to Rayron's point, it's basically that, right? Again, coming back to the word conviction, coming back to the word understanding the company that you are investing for the long run. If, let's say, especially now we are in this market where everything is so jittery, you have if you're investing in a company that have got no earnings, what Rayming mentioned is very important. Can you see the path to profitability? Are you able to, for instance, speak to Mingtek and speak to Warren and talk to them for 1 hour about this company and how it's going to make money in 2 or 3 years' time, right? I managed to convert Warren. Unfortunately, I didn't manage to convert Mingtek. But,
Really unfortunate, man.
Yeah, but if, let's say, you are able to really talk about that particular counter, I don't see why you need to be scared, right? So maybe as an example of understanding business. So even for let's just say a startup company like Stockbit. Stockbit is an Indonesian fintech company. You know, right now we have two platforms. One is Stockbit, which is in Indonesia is a securities company, and the other one is Bibit, which is basically like a robo advisory. And even in Stockbit, you know, we have about 3 million to 5 million users at the moment. So you should be able to sort of like roughly calculate what are the potentials of revenue generation. So, for instance, what if, you know, in terms of Bibit, in terms of robo advisory, what if, let's say, I have 5 million users at the moment, and each of the users are spending, say, about right now $500 as average pocket size. And then if, let's say, you're adding on to a small percentage of asset under management into that, and of course, you know, if let's say you're in a brokerage company, and these are not like new businesses, right? These are basically businesses that had been around the market for a long time. So you sort of understand what is their business model. You know, a brokerage company, a fund management company, you know how they make money. It's just that right now, this particular startup company, this particular fintech company is coming in. They are digitalizing things. They are disrupting things. You know, just to make everything more efficient. So it's just a numbers game. You know, so you just put everything into a piece of paper and just sort of like see if this particular company can actually turn profitable in, say, 5 years time, in 10 years time. You know, so it's all about coming back to understanding the business lah.
Yep, I agree. So guys, let me know if type in wow if you have learned something from this sharing, like you have learned something that add conviction to whatever growth stock that you are holding now, right? Or you have gotten better idea on how to deal with the emotion, or how to pick the good companies versus those that are maybe all hype and may not work out. So type in wow, because if there is more than 15 people typing wow, we're gonna switch mode, we're gonna switch engine, we're gonna stop talking about all more philosophical one, which I think we have already done quite well doing that. We're gonna start talking about individual company, Tesla, Sea Limited, Grab, right? If you're wondering what's your thought on it, more specific. Any one of you holding any of these companies? So maybe you can share what company you want us to maybe discuss about. So post it on the comment. And if quite a few people post, or if there's no people post, you're the only one that posts, then maybe we're gonna discuss that. So today we have a super roster. These people bought Tesla before it 5x, man. So if you really want to get the best experience and best idea from here, this is the time. So some Wen say Upstart. Okay, let's see. Let's see how many people voted Upstart. So if quite a few people commented that as well, maybe Warren can give a little bit sharing on that. But let me see how many wow is there so far. Okay, not bad. All right. So let's talk about Tesla. Right, it's been up 500% in the past 2 years. So do you think right now it is still a good time to buy? Because it's been quite crazy and it's already been so popular. So many people have been looking into this company, right? So is there still opportunity, or is it overvalued? Maybe, we can monitor, but maybe wait for better opportunity. What do you guys think? Is now still a reasonable time to get in, or maybe we want to wait for a market crash, right? Yeah.
I think all of us are Tesla tools here, right? But maybe I guess I tend to look at specifically for the best companies. I don't try to use a valuation to hinder me from getting in. So the context being like, you look at all the past, great companies who have like outstanding run up in the markets, Amazon, Google, Apple, Facebook, all of them were always overvalued at every single year. Even after 30% pullback, they are still overvalued. But history has shown that they have given us great returns. So it's just like, so they are overvalued because the markets or the Main Street or Wall Street tends to evaluate these companies using the wrong metrics, using a valuation matrix. So if you judge an elephant on its ability to climb a tree, then it's stupid. So if you judge Tesla based on just an automotive company, then it's overvalued for sure. But if you look at some of the potentials, the S-curve that are upcoming for Tesla, they're building up 2 new factories, full self-driving, robot taxis, and then the energy market with their batteries, and also the robots, right? The humanoid robots. So there's a lot of optionalities with Tesla that can grow up to be honest, I'm not too sure also where how much more they can grow. But in my opinion, it's the best bet for me in terms of allocating my own cash. So Tesla is one of my highest conviction companies for that reason.
You're muted, bro.
Yeah, so personally for me, right, one of the reason, and of course now I'm getting bashed because all 3 of you are Tesla bulls. So guys, by the way, today I'm just here to poke holes. I'm not here to so I just poke holes on whatever you guys are saying and just try to act as the balancing party. So I personally am not comfortable buying something where I cannot put a value to it. Like I cannot. So let's say self-driving car, right, or AI robot. Yeah, it's very interesting, but it's very difficult for me to put a TAM to it. Like how much money it's gonna make, right? It's very difficult for me to, get an idea. How much. Will people really buy it? Like in Malaysia, all the kampong roads, will it work here? Will people pay so much? For the self-driving car, software? And if yes, how big is this opportunity? Will it be as big as Facebook? Because Tesla market cap is already 1 trillion now, right? So Facebook is also close to that. So it's already been so richly valued. How much is it has already been priced in, and is there still further opportunity from there? So that is one thing that is stopping me. But of course, I've been an idiot, right? This, right now, whatever they are earning and whatever they could be earning in the next 2 years itself, if I can roughly get an idea, and if this is what I expected, I would have gone so big 2-3 years ago. It's just that I don't have the foresight to see, wow, they can actually make so much revenue and potential profit. So maybe you can have something to share here, right? How can we buy without being able to put a valuation or have a rough idea on the TAM or this? Anyone would like to chime
I
in?
think
Valuation is a concern, so
yeah. I think for me, I would just like to address a few things, right, Ling Tik. Number one is that when it comes to putting in numbers and assumptions in Tesla, today it is actually a lot easier than, let's say, you're trying to project their earnings and top line, bottom line, say about 2 to 4 years ago. Honestly, today is a lot easier because things are basically shaping up. Okay, so that's number one. Number two, I also would like to mention, that in my personal opinion, today Tesla is definitely short-term overvalued. But in the long-term grand of scheme, coming back to what Riming mentioned, all the potentials, actually it's all already being mentioned by Riming, right? So it's in the long term, say, I don't know, say 5 years or 10 years, I don't think it is fairly valued yet. So what I would say is, yes, it is short-term overvalued, but if you want to invest in Tesla today, the question is, the first question you need to ask yourself is, what is basically your time horizon? Is it to invest in and try to make money in the next 1 year? Is it try to really just nibble in and dollar cost averaging for the next 10 years, which I think, if let's say that is your investment goal, to have a long-term investment, to dollar cost average and slowly nibble at this price today would be the best way of doing it, because again, Tesla is short-term overvalued. And lastly, I think I would just like to also mention, some of the, I would say, non-qualitative and even non-quantitative things which people do not see out there. And this has got to do with, say, fund flows of Tesla. Because I think a lot of people don't really realize this point. But when we are talking about Tesla as a stock and why it is gonna be forever overvalued, right? Is because that number one, they are in the index already. So actually, as a matter of fact, I knew a couple of years ago when Tesla was gonna be in S&P 500, we are gonna be able to see that the valuation is just gonna be stretched even more because of just the sheer size of passive funds that is going to track Tesla and that's going to flow into Tesla. So I think that's number one that you need to take into consideration when you're talking about valuation of Tesla. And secondly, again, when it comes to fund flows into Tesla, I think a lot of people here seems to be investing in SoFi, and I think maybe a lot of people understands about, say, like Robinhood and Futu in China and all that. Even in Singapore and Malaysia now, we are talking about brokers that is able to trade on a fractional shares basis, right? So the developments that is being that is happening around the global equities market, the capital market, also have to, I mean, everybody also need to understand about this, because imagine at the moment, you have applications in the world, and if some people here track some fintech companies or even some brokers that has gone digitalizing in Singapore, like iFast and all that, right? You are able to buy fractional shares at the moment. So last time, perhaps investors that invest in Tesla might think that it is very expensive, but right now, even somebody who doesn't have what's Tesla's price on, like $1,000, right? Yeah, somebody that has like $100 are able to invest in Tesla already, and these apps are very, very much thematic based. In a sense, what I'm trying to say is that these are basically applications and investments that is close to your heart. It is no longer something that has got to do with fundamentals, qualitative or quantitative. These are fund flows that people that, oh, okay, I feel very, very strongly on women leaders. So they go to the app, they click on the theme, women leaders, and all the women leaders are there. So they just buy shares, right? So when they go into the particular app, they look into like I don't know, say like electric vehicle, and Tesla is there, they'll just buy it. So these are things that I just want to highlight to everyone here, that is actually happening in and around Tesla, which sort of like, it is difficult to quantify, it is difficult to see, but these are forces that is creating this sort of like I don't know how to say, like forces lah, basically, that is making Tesla such a loved and such a high valued stocks all the time.
Makes
Another
sense.
way to add on to what Ronnie said is like Tesla is riding on a lot of secular trends. There's a lot of tailwinds pushing it. The electric vehicles, full self-driving, AI, anything that is like in the next 5-10 years you expect it to be bigger. Tesla is there doing it. Like batteries with energies, right? Especially with the oil crisis. Yeah. So because of all these, there's a lot of these kind of intangible forces outside of quantitative or qualitative, intangible forces that are pushing Tesla moving forward, and some of the other companies out there.
And have you guys watched like Return to Space from Netflix? It's talking about SpaceX. So it's like, whoa, like Tesla and Elon Musk are able to bring together like the best of engineers in the world, right? So if you're not investing in this company, then what else do you want to invest in, lah? But yeah, coming back to the point as to whether Tesla is a good buy at the moment, again, it's back to your time horizon.
I think there's no doubt on the quality. I think a lot of people, I think nobody would doubt the quality of the company. It's more on the valuation, and I think your point there is quite accurate. It's more on, it's quite unlikely that it will become very cheap, undervalued for you to buy, because it has become the stock to buy. You want to buy stock, Tesla is one of it. So anytime it dip, there'll be quite a lot of people buying the dip. So you want a very cheap valuation for this thing that everybody recognize is good, and there's so many good news coming in. It's gonna be very difficult, and you would say the future is quite secure for this company, and that's why even if you are overpaying but you're not going all in, it could make sense in the long run. Something
To be honest, I don't expect, after Tesla get added into the S&P and as it gets bigger, with more institutional funds coming in, you don't expect too much volatility with Tesla stock price. Like gone are the days where it can drop 80-90% because Elon Musk just tweet something. Yeah, like I think you take the recent growth stocks pullback as an example. I think
Yeah.
Tesla,
Quite safe, huh?
Tesla did quite well, right? They only dropped quite like relatively little compared to the other companies. So that shows that there's a lot of support lah. Yeah. So I don't expect. So if Tesla drop like 20-30%, that's a good enough discount for me really. I'm not going to wait for it to drop, 50, 60, 70, 80% because my expectation might be too unrealistic lah. Yeah.
But do you see Tesla becoming the super growth stock like it did again, or you would see it's gonna perform more like a blue chip, maybe 10-15% a year
I think
kind of?
with Elon and him, the growth potential. So the growth come from where? The growth come from like the innovation, the culture, the management from the top down. Yeah. So all that like what Ronnie said, they get the best engineers. Like the best engineers, you graduate at top of the class. Either you work for SpaceX or Tesla. Right. So if you have the best pool of talent, like how Facebook and Google 10 years ago, they also got the best programmers, right? Then the company will continue to do well. So I expect there's a lot of new products to be coming out probably in the next few years or so. So all that will add on to the growth. So there's a lot of growth that we can't even visualize yet, but it's out there. Just like, with Apple, maybe 10 years ago, investors also cannot put perhaps some of the newer products onto their spreadsheet. Their Excel spreadsheet. Yeah. But that is what you are buying. Actually, you are not just buying, the numbers, but you are buying the innovation that the company has. Yeah.
All right.
I just
So
want to say something. Sorry. Yeah, you want to go on?
No, please continue, Warren.
Yeah, I just want to say something about Tesla. I mean, and that's a good question that you asked us now. Like, when we want to look at the market, obviously we want to look at what deals are in front of us, right? So we have Upstart growing close to 80%, SoFi growing at 70% revenues, other companies growing at this much. But we have a company like Tesla, where it's so much, and I want to bring back to what Rondi said as well. It's way easier to project their coming revenues now that they have their gigafactories already open and whatnot, right? So it is actually easier for investors. Now, the only bad news for them is that they are paying a little premium, which is normal in the market because we go in a little later into the S curve, right? But the questions we need to ask ourselves is, okay, we got a monster of a TAM. And if you want to talk about TAM, we need to see how many, based on reports, and EVs is one of the most covered sectors in the world now for media, okay? And they all say the same thing. Possibly 20 million cars, okay, will be sold per annum by 2030. Now, the question we got to ask ourselves is, how many percent of that TAM, because that's the TAM, okay, total addressable market, how many percent market share can Tesla actually grab from that 20 mil? In my opinion, based on what the progress is, 20-30% easily. But now then obviously we have to track back to whether or not the capacity can meet up, right? But if you really work out their ongoing persistent 50% CAGR year over year, by 2025, 2026, you're looking at 280B revenues. Now, I'm only talking about the automotive side of Tesla, because a lot of people are saying, hey, this is just a car company. Okay, let's fight on the car company level. The operating margins are already more than Toyota, BM, all these cars already, ICE cars, okay? And ICE cars are supposed to be higher. Why? Because battery costs are really expensive. Tesla is the only company that can increase costs, hence pricing power, and the demand will still not be affected, right? So Tesla is in a stage in the S that if you use valuation metrics or value metrics to argue, they can still win, in my opinion. But then again, to answer your question on whether or not they're overvalued now, also we have to ask ourselves, where are they in the S curve? Because a lot of companies, I mean, every company, there's a life cycle, right? If they're old, they're young, they're mid, right? Like if you were to put an age on Tesla, right? is, I would say, 19 years old. You know what I mean? There's so much growth ahead of them. So that is the ultimate question, right? So I covered a few things. Number one is, okay, on the automotive side, what are the potential revenues and net income? They can easily get 20% net income, in my opinion, by 2025, easily.
Margin of the sales.
Correct, margin, net income margins, and gap basis some more. Not like your growth stocks adjusted EBITDA or non-gap. Gap basis. Okay. If you work out then, and if you deem that Tesla still has room to grow even by 2025, they should demand a higher premium, right? So yeah, that's what I want to say. I mean, and also tagging to what Rondi said, what is your horizon if you want to buy Tesla right now? Because if you buy it at 900 or 1,000, don't be surprised that it will go 700 and you can lose 30% unrealized. But don't go crying to someone, because that's how the market works, right? So you need to that's what I mean by buy plan earlier just now. That's what I mean by I mean by buy plan, knowing where the stock is going to go, projections, and now it's easier, by the way. So if you have a long-term horizon, okay, if it goes down, then think opposite to buy on a dip rather than sell, right? And yeah, so basically that's the magic of Tesla. Like, and not even robo taxis. Okay, we talk about Grab, we talk about Uber. These guys are gonna get their market share eaten up so big. Like owning a Tesla car is an asset. In the future, because when the cars drive by itself, you're gonna generate revenue for you rather than the car, losing money. So I can say Tesla changed the game. They break the wheel. Basically, they broke.
I think you still want to show the S curve picture to
Yeah, sure.
some context
Right.
to what Warren is
And
saying.
talking about self-driving car, all this, which is great, because our next topic can, audience, please type in this word GRAB, Grab, if you want to hear what's your thought on Grab, seeing that they are Tesla bulls, right? So if the self-driving thing happen, are they bullish on Grab or not? Type in Grab if you want to hear what's your thought on whether Grab is an interesting company for them, seeing that it has already dropped 70% from IPO price. Yeah.
Yeah, so I think to put some context into what Warren was saying earlier, right? Like I think Tesla is still at the infant stage. Like everyone is just talking more about the EVs, how many cars Tesla is going to be making, but they are not really valuing it or putting things into a wider or longer term perspective with what is to come down the line. So if your time horizon, the longer your time horizon, the cheaper Tesla feels like basically.
Yeah. Okay, I definitely would like to have more discussion on Tesla, but just to keep the conversation moving, flowing to different topic. Next time we're gonna come back and we're gonna dive deep into what energy. What do you mean by energy? The lithium battery that they are producing, they're gonna sub out, or their battery for solar farm as well. AI robot, what's that? I saw it, right? The cool looking white color thing.
Tesla,
Okay,
Mingte, I just want to say, like today, now Tesla is around 1,000, and you feel like it's expensive. The next time when Tesla goes to, because human mindset is funny, right? You actually want to buy when it was expensive, but when the stock actually fall down like 30 to 40%, which it might, right? So when Tesla the next time is at 600, 700, if you don't buy, then I also don't know what to say already.
That's why I was laughing. We got 3 Tesla bulls here, and you can't
Yeah,
convert.
man. You guys are making me feel like I have to every time I talk to somebody, I have to go and lock my account, forget password. I'm afraid that I'll do something stupid like go and buy big or something like that. So but we have to move on to Grab, but definitely Tesla, after listening to you guys, is definitely on my radar. And last time I was not comfortable because I cannot put the number that I put that I think is crazy. They already achieved it much higher than it. So my expectation is being broken up, exceeded my expectation by so much. And at least right now, like Warren said, right, we can put some number on the potential profit in the next 2-3 years. And when I've seen that, yeah, I think right now is not too crazy. When I see the projected 2 3 years profit, so if there's a dip, yeah, definitely it will be one of the company that I'll look into. How about Grab, right? None of you, as far as I know, bought Grab. But let's start with Rayming because Grab HQ is from Singapore. So what's
So
your
yeah,
thought
I'm
on?
a big consumer of Grab, like in my own personal life. Like I Grab here and there transport, and also order Grab food when I'm at home because I don't know how to cook. But as a company or stock wise, I have to say, I have not really dived into it. But based on the shallow or superficial understanding that I have, I feel like they are still in the, like just now we talk about companies that have a clear path to, either they're profitable already, there's a best group, if not, they have at least a clear path to profitability. But I think Grab might be still they are still uh, burning money stage lah. And I think recently they just IPO. So my view is that I don't have to buy a company, at the very moment it come out or that very year it IPO. I can always wait a few years or at least a few quarters to see how is their, not just the numbers but also like what is the company direction for the next few years. And if I would weigh these against the other opportunities that are out there, I feel perhaps Grab is not where are we putting my own personal money on now. Yeah.
Yeah, because you feel a bit unsure whether they can truly be profitable, right? Seeing that
So I
there
think
are new
investing is
competition
always,
coming in.
investing is always a way of opportunity cost. If I have already thought about Tesla for the last 30 minutes or so, if I have such a good opportunity like Tesla, in terms of the risk versus reward, why do I want to invest in Grab or any other company? So my thought process of investing in XYZ company, be it Grab or Upstart or Palantir or any other companies, right, is there a better opportunity for me to put my money on? Yeah. So yeah, there's like 1,000 good growth companies out there, but you know, my portfolio is limited. I can only concentrate to a few positions. So which are the like top few that I want? So in that regards, I feel Grab does not cut the list up. Yeah.
Okay, but you own C Limited.
Yeah, I do currently own limited.
Later, we're gonna get back to why you choose C Limited over Grab in terms of opportunity, right? Warren, anything you want to chime in on Grab, or you?
Grab. uh, well, I'm like rooming. I'm a user of Grab. I like Grab. Grab
Here,
food.
everybody use Grab.
Yeah, lah, everyone use Grab,
Southeast
right?
Asia, everybody would have used Grab.
Exactly. But the thing about their business is that I think they just reported like huge losses, right? So to be frank, I didn't dive into the numbers. But I think if I was to see from this lens, is that the way they will be profitable is by going into either their freight or fintech business. Lah. That's all I can say. Because this Uber-like model is definitely going to be burning money all the way. That's my opinion. Sorry if I'm too bare on Grab. But yeah, this is a business that I would not really sort of invest in at the moment, simply because it's not really like clear for me. But again, I didn't really dive deep, so to be not fair. But anyway, yeah, that's what I think.
It's interesting, you guys are active user of Grab, but you never think to look deep into the company share,
I
which
think maybe I personally will defend Grab a little bit here, right?
yeah,
Because
yeah.
yeah, I think if let's say I mean, I'm an Indonesian, so and I went to Singapore quite frequently as well. I just went there early of this year as well. So I know that Grab is basically in the three places where I stay in Southeast Asia, lah, Singapore, Malaysia, and Indonesia. So and recently also we have this week Gojek Tokopedia who went public as well. And if let's say we just want to compare, okay, let's just say there is a comparison sheet between Grab, between C Limited, and between Gojek Tokopedia. I think people needs to really take into consideration number one, what is their business model? Yeah, okay. So what we know is Grab is in the delivery space, Grab is in the mobility space. They are now in the financial services, and I think the financial services people are not giving them enough credit because um, if you're talking about C Limited, if you're talking about Gojek, Tokopedia, C Limited are trying to become digital banking across the three countries which I mentioned as well. But Grab, I think, has already they have laid the foundations better, in my opinion. You know, like in Malaysia, digital banking, there is I think Grab in the front running, and I think even in Singapore, if I'm not mistaken, Grab with Singtel, right? And even in Indonesia, they are buying over like some companies as well, and working together with MTech, which is one of the tech companies as well in Indonesia. You know, so in terms of digital banking in this particular region, they are really putting down solid foundations lah to become a regional digital bank. So that's number one. And I think, when we talk about market cap, and I'm just looking here, right? So Grab is now trading at about 13 billion US dollar market cap. C Limited is trading at about 63 billion US dollar market cap. And Gojek Tokopedia is trading at 31 billion, 31. So it's like 3 times more than Grab. For sure, the profit this year is lousy lah. It's like about minus 3.5 billion in 2021. C Limited was at minus 2 billion, and Gojek Tokopedia is at minus 1 billion. And I think another thing that everybody needs to take into consideration, especially when it comes to the current market environment, is basically whether or not this company can withstand recession. Because we are a lot of the variables out there are pointing towards economic recession globally, right? So when recession hits, I think either Ruiming or Warren mentioned earlier, there will be a lot of companies that's gonna go dead lah, basically, especially those companies that's not able to raise fund. But if we are talking about just net cash position in the three companies, let me just give you some of the numbers, and please double check because I did this quite rush lah, right? So Gojek Tokopedia actually only have 1.5 billion US dollars in net cash. Okay. Now C Limited have got 10 billion in net cash, which is good. That can actually last them quite a long time. But Grab actually have about 6.8 billion of net cash. So if let's say we're just talking about market cap X of cash, X of net cash, right? We are talking about the net cash of Grab as compared to the market cap at 52%, So this company, yeah, for sure they are not making money. For sure they need to keep growing, and you can't really see the path of profitability yet. But at the very least, you know that when the recession hits, they are not going to die lah, basically. They are not going to die. As a matter of fact, Gojek Tokopedia might be at a higher risk, right? Because they only have 5% net cash over market cap. C Limited is only like 16% net cash over market cap. So at this current valuation, I think Grab is interesting lah, I would say. It's interesting. And they have also, I think if you're in Malaysia, they have bought some Jaya Grocer. So they are actually trying to build that similar approach like Amazon buying Whole Foods, right? So they are trying to build that online offline presence lah, So as much as Grab is difficult for one to really look at it and maybe invest and understand the path to profitability, because I think even Anthony Tan was being questioned in some of the interviews, right? And I think the way he answered doesn't really build confidence on basically when is Grab gonna be profitable. But the same can be said with C Limited, like when during the interview, I also don't find any confidence in and when you read like Forrest Lee's letter to the employees at C Limited, it also doesn't feel like what's the path of profitability. Yeah, for sure, granted, when they stop growing, maybe there is a switch button that they can easily be profitable. But yeah, so I think the term here is basically is these companies, are they growing and making profitability? Are they mutually exclusive or not? So I personally think both of them are good companies, and both of them, in terms of making profit while growing, might not be mutually exclusive.
Might not be mutually exclusive. That means
They can grow
grow
and make money at the same time.
and make money together. Okay. All right. And thank you for your sharing, because you have highlighted a very interesting point which I didn't realize, which is the Grab right now, the valuation. Yeah, see, I mean, those kind of valuation guy, yeah, it sounds very interesting now. It's half the market cap is cash. So the real, you're buying the business for like 6-7 billion. It looks not too expensive now. And I think their mobility segment is already EBITDA positive despite the pandemic. Yeah, it's just the food delivery will take some time. And so that's something very interesting to monitor. Thanks, Rondi, for sharing. Okay, and when he point out the market cap, which makes me wonder, go-to is supposed to be e-commerce plus something like mobility, right?
So
But
GoTo actually,
no,
GoTo has actually everything that Grab and C Limited has. They have
yeah,
delivery, they have mobility, they have financial services, and they have e-commerce. So
yeah.
Grab doesn't have e-commerce, but GoTo, because they have Tokopedia, so they have e-commerce. But the thing is, they are very concentrated in Indonesia, lah.
Hmm. Yeah, which is why it makes me think, hey, C Limited, when compared to them, doesn't look cheap, doesn't look so cheap because it's like more than twice. It's more
But
than the two of their market cap combined.
yeah, but I think this again comes back to the argument of really understanding the characteristics and where a stock is within their market, So, I mean, we always have this discussion, Riming, as a Singaporean, like Malaysians always have this discussion. Why on earth do I want to buy, say, like a Penta Master
Yeah.
or some other tech manufacturing stocks in Malaysia at like 50 times PE when I can buy AEM in Singapore at like sub 10 PE, right? So, but the thing is, again, and perhaps this is one of the defense on why Gojek Tokopedia is being valued so high, because once they got listed, right, GoTo was basically immediately number 3 in terms of market cap in Indonesia. So there is a huge fund flows going into it, without understanding fundamentals. I think we all know all markets also have all this sort of silang approach, right? The short-term traders. Yeah.
Yeah. Okay. So, Roy Ming, do you want to comment a little bit on C Limited? Why are you bullish on it?
I have a position in C Limited, but I think recently my confidence or my conviction in C also dropped quite a bit with all the recent what is happening now, the headwinds. With Garina, their growth kind of halted and actually is kind of guided for lower growth. But Shopee is still at 50% or 70% growth rate. So, but I think with all the headwinds that are coming, I would say the prospects for C Limited might not be as good as previously. So I would say on a general context, it has returned back to like pre-COVID levels in terms of their growth. So they have suddenly a turbo booster during COVID because they're at home and all that. But I think now we are kind of back for C Limited context. We are kind of back to the pre-COVID levels in terms of their growth rate. Yeah. So in general, I try to in Southeast Asia, there's so many competitors. I think we only mentioned GoTo, Grab, C, and they're just fighting for market share. So ideally, I would like to have a clear and distinct winner. Yeah, like for example, if you think about Tesla, who are their competitors? You won't rank like General Motors for as their competitors, or Apple or Amazon for that matter. So this is where doing a comparison helps. Yeah. So I think in the Southeast Asia space is still a battleground, and let's see how it's going to play out over the next few years. Yeah.
So can we say if let's say Tesla dip and there's an opportunity, maybe you may want to reshuffle capital a little bit?
Onto Tesla, yeah, I'm buying it every day. Yeah, for Tesla, I have quite a heavy allocation on Tesla.
Okay, let's talk about. I think Warren and Rondi is not into C Limited, right? So let's talk about Palantir, right? Which Warren is a big fan of, and I think Rayming also invested a little bit on. And audience also were asking question on Palantir. What about Palantir, right? And cut Palantir out of their position. So any comment on that, right? Now, my biggest pain point with Palantir is initially when I was reading it, it feels to me that it required a lot of manual work to grow, but I think that has changed lately. Previously, the reason why I didn't invest is it's valued like a growth stock, but the business nature feels to me it's project basis. It's like a construction construction company, project based, and it's quite limited. But I think they are venturing out into a lot of different markets, so it's a bit different now. But number two is I find that the stock-based compensation is really, really crazy high, man. So yeah, what are your thoughts on it? Why are you guys still bullish on Palantir? And do you think it's cheap now?
Yeah, so let me start off. Palantir essentially is a complex business to understand. Let's put it that way. Qualitative wise, is actually quite a difficult, tough business to understand, simply because it is not like your normal everyday retailer you use, sort of product lah. Now I was fortunate because my coaching clients, I also do coaching one-on-one with US and international people. He is working in the same space, but they are competitor. Now he's telling me that because he knows the in and out, right? And he wants to be biased in his company, but he can't because he's trying to tell me that Palantir is very sticky. They have built over a decade of stickiness from government jobs already, right? And essentially, Palantir is an AI company. Let's put it that way, running a SaaS model, software as a service. So to answer why am I personally bullish about Palantir is that okay, first of all, obviously we have to understand the business lah. The business is, like you said, run on like similar to like a construction services model where they have to go out, to their marketing have to go out to get jobs, and then they have to send field engineers to go to the company and bring in the data into their data set and then integrate it and then go back, right? So in that way, revenue realized is like a services business, but the scalability side is they want to be the industry default. So what does that mean? So you have to understand that Palantir solves really complex problems, really complex. So imagine, I mean, it's good. If you guys are bullish, by the way, your audience, if you're bullish on Palantir,
I mean, LTR guys, if you're bullish on Palantir,
yeah,
means you bought, yeah.
please look at the demo day and how it works. Like they literally viewed it like a layman on how it works, right? From how the data sets work, how their satellites can actually map out the whole entire site, and just basically streamlining things easier for the company. Okay. I'm trying to talk about Palantir without being so biased, but that's the game. It's quite game changing in that way, lah. So their recent SPAC acquisitions of Black Sky, not mistaken, is the company where they actually can have satellite data to really project and bring out data on all the things that they map out, is very strategic, lah. So all in all, what I'm trying to say is that they can literally help you. So imagine big corporations. They have a lot of like manufacturing line. They have a lot of steps in order to manufacture that door part or whatnot, right? It takes a lot of steps and data. What they can do, to summarize in a layman, is they can help you save costs and predict the problem that hasn't come out yet. You know what I mean? Like they can map you out. Like okay, if you move it this way, the lead will be that way. That will be the result, and then that will be the result, and then you get this product. But if you move the other way, then so the data is very important. We are living in a world where data is very scarce, but it's not really streamlined and integrated. So that's what the product fit they can do. Okay, so what I mean by industry default is that we have financial sector, health sector, all the other huge energy sector, which they are actually have already built a database and their presence in. If they attack to one sort of industry and company, they don't have to utilize the same manpower to be doing it for other companies, simply because it's already done on one, right? All the data sets are done in one. They already know the game of the industry. So that's what I mean by default. So they also built what they call, I think not mistaken, was Airbus or Skybus. I forgot the name, sorry. But they built a platform for planes, right? And they partner with a company to actually sell this service of data sets and whatnot. So they need a industry partner. They're selling their system. They're selling the AI, and that's where all the recurring revenue comes in, right? So in order for companies to scale, they need to decrease operating expenses, decrease capex, increase margins, right? That's essentially how scaling works. So that's the scalability potential that people don't see, and that is really happening and reflecting in the numbers. So I was really surprised why Ark sold. I think she's a trader, lah. I don't know. But anyway, I'm really surprised why Ark sold, because their margins are actually expanding, improving a lot. Their numbers, if you check out the numbers, guys, it's
Yeah,
been really.
Palantir has been a not easy company, but like you say, right now they are selling something like a software that they have built because of all the data. It's like a database that they are selling, sort of like Tesla, collecting the information, perfecting the self-driving car software. You're seeing something like that happening, and it doesn't
Correct.
need a middleman to teach them how to use, or you don't need any additional work. Let's say if I'm a construction company, so if I
Yeah.
use this, definitely there must be some adjustments, a manual person coming in and help, right?
Okay, so you need to know their pricing structure also. Uh, Number one, not a lot of small medium businesses can afford, because their pricing is really expensive. So ARPU, average revenue per user, is like, per client, is like ranging from 2 mil to 10 mil, depending on how many server cores they have, right? So I looked at the price. God, they're charging 150K per server core. A multinational corporation can have like 200 server cores, or more, right? So that's how good this business is. When they go into that company, the way they scale is by, if let's say the company grows bigger, they can just get free money by charging per server core. That's one way lah. The second way is obviously the industry default that we talked about. And they also have like a maintenance fees every year. So if they're sticky and if it works, like a multinational company have earning, let's say 10B in revenues, 20 mil is nothing to them, So if they can save the company more money, it's a no-brainer. That's why they can be sticky lah. Now their game plan must be in the commercial space and actually making it more affordable. And they can, in my opinion, because as the AI gathers more data and they integrate more, and it's like a network effect, like it'll be easier for other companies to actually use them. So that's the scalability, in my opinion, that I see. And furthermore, if we want to be talking about numbers, I personally think they can be profitable this year. Now, if we
On an
Okay.
EBITDA basis, or including the stock-based compensation?
I personally think it's of course you have to lump in stock-based compensation. You have to. I'm looking at the quantum cost. I think on a gap basis they can be profitable, but I may be too bullish lah. So to understand Palantir also, is that we have to look at the revenue cohorts. They have their revenue cohorts, and the reason why they're sticky is because ever since 2016 or before, their revenue cohorts are actually stagnant or increasing. That means that people are still using them since then. So when they're securing more and more clients, especially on 2019, 2020 cohorts, and you can see that from the investor deck, it's actually increasing. So you got to understand the phases of Palantir. There's a acquire phase, expand, and scale phase. Once per project, once they reach scale phase, more revenues will come in. So imagine like a construction contract. You land a 20 million job. Obviously, upfront is like just 20%, depending. But as you progress more, there's more collection, right? So if you were to actually draw like a Gantt chart on how much revenue you can recognize, you can know that a lot of them will become, because from the 2019 cohorts until today, right? I mean, realized revenues in 2022, there'll be quite a sufficient amount. Yeah, correct. So if they scale operations, down, their margins will expand. So that's why I personally think they can be profitable. Analysts also have them projected to be profitable this year, but we'll just wait and see lah. But anyway, Palantir is a long-term game, long-term game. So that we have to understand that before we dive in, because it's a complex business. Valuation is not easy to value, so it may not be everyone's cup of tea. Yeah.
Okay, thank you for a very insightful. I think anybody that wants to know about Palantir, you just gave a very good summary. How about Raymond, you have something to chime in? Whether right now is a interesting
I
time.
think Warren summarized Palantir quite well. I think Palantir is also quite a polarizing company. Either you like it or you don't like it. For me, I'm a bit indifferent because I just can't wrap my interest around the company. So for me, like if I don't have an interest in what the company is doing, then I like if I don't have the interest, then I will not go and research deeper. So I did try a few times, and definitely Palantir has a lot going for it in terms of the tech. Like predicting the future is definitely something good lah. So if I would play a devil's advocate, one thing that I have at the back of my mind is I tend to like to invest in companies that are more B2C, business to consumer, instead of like B2B. Because if you look at some of the context being, if you look at some of the largest or companies that are the most profitable, Amazon, Google, Facebook, Tesla, Apple, Microsoft, they are all primarily B2C lah. Yeah. So you don't think which are the companies, like largest companies or the profitable companies that are B2B one? Like what company come to mind? So perhaps Salesforce, at a market cap of around 200 billion. And Salesforce has been around for many years, man. Yeah, Salesforce is like the godfather of software companies. And they are only 200 billion. And if I look at the market cap of Palantir, and again, this is all in the context of just playing devil's advocate lah. Yeah, I think around 25 billion right now. So what can it 8x or more lah to a 200 billion market cap over the next few years? I don't know. But it's definitely an interesting company lah. And I have a small starter position, but it's not a company that I want to spend my time researching more because of lack of personal interest. So I can't really comment too much on it.
So can I say that your biggest company, the most bullish stock that you have is Tesla, and that's like your go-to stock still? Based on all the comments. Rondi, definitely, has always been and will always be, unless something very weird happen. Yeah, so I think from this sharing, which is interesting, everybody have different view, but one thing that all my guests agree is Tesla. This one is definitely, you want to really look into it, and despite the high price, if you make the right move, it can still make sense. But the rest, there were differing views. Yeah, and the most important thing you need in this kind of market is conviction, especially when it's a volatile market and stock can drop. So find something where you can hold and you won't have so much doubt when the share price drop, right? So that is my closing remark. What any one of you want to make some closing remark, because we are here for 1.5 hours. I think it's time to wrap up. So let's go one by one, right? What do you want? If there's one thing you want the audience to remember, what do you want them to remember about, and where can they find you after this? Okay, Warren, you start first.
Oh, I start. Okay. So I think the takeaway is that I would say I would really want to emphasize is the markets are going to get brutal, in my opinion, and I don't want to scare you guys too much, but in my opinion, the cycle is here where it's most likely going to be on a bearish side rather than bullish for next year and coming. But I can't time the market. But the takeaway I want to say is that we need to work out our buy plans and portfolio management, because imagine if you're a new investor and you came in 2020 or 2021 worse, and then you went into the hype of growth stocks, let's say Lemonade or any other growth stock on the high, right? That's actually very dangerous, because if you don't know and you don't have like a long-term mindset, you could just click sell and then you realize a huge loss. And it might take a few months or maybe a year to get back your losses. So that's the scenario that we don't want, right? So what I'm trying to say is that before you click that buy or before you click that sell, we really got to understand, again, like the takeaways that we all talked about just now, from understanding the business, building a buy plan, having projections. That's like the most important thing. Okay. That's number one. Number two takeaway is that we are for Academy, and what we do, like what I said, is that we emphasize on portfolio management, and we have a certain allocation on thematic plays or short-term trades, and then plus long-term growth. I think we need that similar strategy. So for people who are managing like 50,000 or 30,000, like they don't have the luxury to go long term, right? So I'm tackling like the retail investor, or a 9 to 5 sort of portfolio, because that's people don't have the luxury of managing 7 figures. So what do? I think that's where trading helps, because it's more of a short term, and that's what me and my partner do. His name is Shafiq. So if you guys are interested to learn about trading, or just want to talk about portfolio management and whatnot, we can reach us through our. We also have a Discord group that is free. You can also join there just to chat or discuss. But I think the takeaway I want to say is that we need to be mindful of what strategy do we want, entirely. Because the stock market, not to be boastful, we can actually gain 20% in like 2 weeks, or even lose 10% in a day if we, yeah. But it's all about managing risk, right? So yeah, that's the takeaway I want to say. Number two is that identify the portfolio strategy that suits you. If you're a busy person, okay, stay with long term. If you are willing to dedicate more time and grow your net worth through stocks, then okay, study the game, right? Study the market. Yeah, and the final takeaway is basically do consider do consider building your convictions in Tesla, for sure, that what we've been discussing, and be mindful that you're not paying on a 5-year premium for other growth stocks. Yeah, so that's what I want to say.
That's a really nice ending remark. How about you, Rayming? Any ending remark, and where can we find you after this if the audience wanna find out more about you?
I think investors can pace themselves. I mean, like amidst all the fear and bad news out there, I mean, when's the best time to buy? When there is like fear on the street, like when it's fearful, time to be greedy, ma. But having said that, right, I think everyone just had to pace themselves, and you don't have to go all in on growth stocks. You can do a bit of like stable stocks, value stocks, or do your bigger techs like Apple, Microsoft, Google, and then try to along the way a bit branch out more into like growth companies like Tesla and so on and so forth. But don't like overnight, like all of us investors, we didn't overnight suddenly become growth investors. I think most of us, at least myself, I also started from a value investor. So yeah, I think having that in mind, and if you dollar cost average along the way up, you will do very well over the longer period. Yeah, just have a zoom out view in mind. Investing is always for the longer term, not so much for the short term. Yeah, and again, it's all about, but it's easy to say, but when the market drops, everyone will panic. Yeah, so it's all about, as an investor, clock up your experience in like experiencing the market drawdowns. Yeah, after a while, you get a bit more immune to it, I would say, in terms of your emotions. So yeah, I do also share some of my own investing thoughts on social media. So you can find me on Instagram or YouTube. I have a YouTube channel also. Just search Wei Ming Invest. My channel or my IG will come up. On Telegram, I also have a channel. It's Invest with Wei Ming. If anyone is interested, yeah, I will share some of my thoughts on growth companies, and also mainly just Tesla. Yeah.
All right. Everybody, mention Tesla, it's like the must mention, which is, please, if you feel like mentioning Rondi, please mention Tesla as well. I mean, that is, the most memorable thing, Tesla, look into Tesla.
I think it's I would probably just mirror what Riming and Warren mentioned, and I think this is one of the things where a lot of retail investors get caught at. Stockbit being a retail community platform, I do see a lot of people, they struggle to first identify their financial goals, and then and secondly, what type of trader or investor they would like to be. I think if you're just starting out, of course you try all methods lah, to really shape who you feel like defines who you are going to be, whether it's a trader or an investor. And I think, the important thing is to really understand, if let's say you're a trader, means you're a trader lah. Okay, technical analysis, charting, and all that, going in and going out, according to the charts. But if let's say you define yourself as an investor, I think it's very important to define what sort of investor. I see a lot of investors struggle with this, and I believe categorically, having been in the market for a few years now, there's in my classification I see three types of investors. I would say, there is basically the dividend investor, means they buy and then they buy dividend stocks, good dividend stocks, and they get dividend in return in a like a cash flow sort of like thing. Secondly is that, are you a long-term investor? So this word long-term investor, I have seen a lot of gurus, I have seen a lot of sifus, educators use it a lot, right? Long-term investor. But what does long-term investor means? In my personal view, long-term investor doesn't mean that you invest in a company, and you sort of like, when it drops, then you sort of like sell out and all that. I think long-term investor, in my personal opinion, is basically an investor that have got a very, very long-term time horizon, say 10 years or even beyond that. Like, you basically invest for, I don't know, if let's say you're a parent like myself, you basically invest for your children, right? So and on this long-term investor mentality, you should focus on the business first, and not the share price, because like, as long as the business progresses, from quarter to quarter, from year to year, you should stay invested, because the other things are just pure noise. The war that is happening at the moment, pure noise. It doesn't. It is. It's relevant today, but it's not going to be relevant in, I would say, 10 years when it comes to your investment. So when it comes to long-term investment, the key is to really invest in the good business that you totally understand, and you are able to sell that particular business as if you're the holder or the owner itself. Yeah, so that's basically dividend investor, long-term investor, act as a business owner. And lastly is basically like a thematic or short-term investor lah. These are normally people who trying to chase alpha in a specific period of time, say a year. So they will buy good stocks, but it's just on a thematic investment basis over a short period of 3 months or 6 months and all that. So yeah, I think that is important to really define what you are as an investor. So I think I would also like to add that if let's say you are this short-term investor, investing in the current market, the current market unfortunately is very jittery, right? I don't know if I can share. Maybe I share my screen lah.
Yeah, sure. Go ahead. David, by the way, hi David. David Paul here say, concur with Rondi, right? Agree with what
Yeah.
you said just now.
So is
Really.
this? Can you guys see my screen?
Can you try to zoom in? We can see the screen, but the words are
Oh,
a
you
bit
can.
small.
Okay,
Yeah.
so this is basically Stockbit, right? And it's a social media investment community platform. Warren and Mingtek is also inside, so you can follow me in Stockbit, and you can share your discussions on Malaysian stocks mainly lah. There is also an Indonesian stocks if you want to invest there. But what we need to understand, if let's say you're a short-term investor, is that like, we try and understand what is happening at the moment in the market. You see that by the first week of March, the fear was at the peak, right? Like, everybody is so scared. Okay, but in just a matter of 3 weeks, everything rebounded, and after that, the market was not crashing. And why was that? Like, I think, if let's say we zoom in, not zoom out, like what Ruming mentioned, zoom in. If let's say you're an active short-term investor, this year in 2022 is a year that is extremely difficult lah. When like, why is the equities market not crashing, say 1 or 2 weeks ago, but today everything is crashing down again, right? So I think the market at the moment is we are okay. So this is basically what we see as this is like a real interest rate over the years, and you can see that a lot of countries are in negative territory. What I'm trying to say is that if you put your $1 in the bank, you are actually losing value. It's gonna go on the negative. So I thought that one of the explanation that was given during that particular 3 weeks of market bullishness was it's got to a point where people just need to invest, otherwise they are not going to make any yield or any return at all. So that is the reason why people are investing. But now today, the reason why Mingtek is having this particular talk is everything feels like everything is going down again.
Yep.
So it is extremely I would say difficult market. And I think I just want to highlight over here, right? So I was just highlighting my quarter 1 top picks performance, and this chart basically says it all, right? Like investors, whether you're an equity or bond investors, they practically have the toughest quarter in decades. Nobody just understand what is going on in the in the market right now. There's just so much uncertainties out there. Like there isn't like a very strong bullish buy everything today, buy sort of like person, and there isn't like someone who specifically sell everything and hold 100% cash also, because that's as Warren Buffett used to mention, in the times of war, holding cash is the worst thing that you can do. So it is a very, very difficult market to navigate, in my opinion, and that is why I think the important thing to do at the moment, as I mentioned over here, is to really have a diversified portfolio. And I believe this is a year where we always talk about the capital market, the equities market, as risk and reward, and risk against return, right? So I think this is a year where not where we shouldn't be maximizing the focus of managing risk is as important as it is to maximizing return. Yeah, so I think that's why I want to mention lah. And yeah, I think do follow myself, do follow Mingtek and Warren in Stockbit. You can even download the app. Yeah, I think I have nothing else to say lah.
All right. Thank you, Rondi, for the super, super good explanation and guide on how, some sharing, some pointer on how we can move forward from here as an investor. For short term, definitely very jittery, have to be much, much more on the cautious side. But for long term, I think all three of you agree is business as usual. I think all three of you have some sort of like a long term portfolio and a short-term portfolio. So Warren have the 20% fast in, fast out. Rondi also have the active portfolio, right? And but the long-term one, you guys like really don't care the noise. Just continue on. All these are noise, but the short-term wise, we have to be super careful this year. And you know, just don't be too gung-ho, like super aggressive, then like it's 2020, 2021. Maybe that's a message that all three of them are trying to say. Okay,
Yeah.
with that, we'll end today's sharing. I personally think today's sharing is super, super insightful, man. Like if you already started, I mean, this sharing, if you are really listening, you will get such a good insight on how to move forward from here. So thank you everyone for joining all the way to the end, 1.5 hour, almost 2 hour. And see you again, guys. Invest safe. Bye bye.